Welcome, ladies and gentlemen. My name is Peter Yusuf. I'm the senior analyst with IronFX. Together we'll be going through a discussion about the week ahead in the markets. Now, before we start, I allow you for a couple of minutes to go through our risk warning and our disclaimer. And as you're reading, let me make a small intro here. Now, with BOC's, BOJ's and ECB's interest rate decision being behind us, we open a window in the coming week. On the monetary level, the chorus of central banks is to peak as we get on Tuesday RBA's interest rate decision, while the highlight of the week is expected to be the Fed's meeting resulting in a decision on Wednesday, probably, and followed by the uncertain decision of BOE on Thursday. Now, the monetary policy puzzle is to be complemented by interest rate decisions from Norway's Norges Bank and the Czech Republic's CNB also on Thursday. The coming week is also expected to be quite interesting in regards to financial releases. On Sunday, Monday, we know China's PMI figures for the manufacturing sector, while later in the American session of Monday, we also get Canada's market and the US ISM PMI manufacturing readings, all being for October. Just before Wednesday's Asian session starts, we get New Zealand's employment data for Q3, while in the American session we get from the US the factory orders growth rate for September and the ISM non-manufacturing PMI figure for October. On Thursday we get the weekly US initial jobless claims figure, as well as Canada's trade data for September. On Friday, market focus is expected to be on the release of the US employment report for October, while on second note, we would also mention the release of Canada's employment data for the same month. Now, with no time to waste, let's start with the USD. And this would be the USD index for our chart. Note how the index has dropped, actually breaking clearly once again below the 93.70. We tend to maintain a bias for a downward movement for the index. Now, to the downside, we would also like to note the 93.20 level, which tended to provide considerable support, while lower even the 92.75, which provided some support around the 15th, 16th of September. Even lower, the 92.35 support hurdle could be mentioned. To the upside, we mentioned the 93.70. Higher than that would be the 94.10. And the highest level noted would be the 94.60. Moving now to US dollars fundamentals. Now the USD seems to continue to be in a sideways motion in the past few days, yet has taken a step down since the end of last week. Market attention was shifted towards the US stock markets in the current week as a lot of high-profile companies released their earnings reports. In the coming week, we expect the market's focus to shift initially towards the Fed's interest rate decision on Wednesday. Now, the bank is widely expected to remain on hold at the range of 0 to 0.25%, yet market attention is to be placed on the tone of the release in the following press conference of Fed Chairman Powell. Now, in a recent statement last week, the last by any Fed policymaker before November's meeting, Fed Chairman Powell implied that it would be time for the bank to start tapering its QE program, yet raising rates is still a long way off, which tended to weaken the USD. Now, should the bank actually maintain a confident tone in the messaging of its intentions to the market and initiate the tapering of its QE program, we may see the USD getting some support. On the other hand, should ambiguity be inserted in the decision and Powell's press conference implying a dovishness on behalf of the bank, we may see the market being disappointed and decide to sell the USD. On a second note, we would like to mention that the time for US President Biden to choose the next chair of the Fed is nearing and may partially be clouding the monetary policy outlook for the bank. As for financial releases, we note on Monday and Wednesday, respectively, the ISM manufacturing and non-manufacturing PMI figures for October, while on Wednesday we also get the factory orders growth rate for September and the ADP national employment figure for October. On Thursday, we get the weekly initial jobless claims figure while the crown of financial releases for the coming week is expected to be the release of the US employment report for October on Friday, with its NFP figure, which disappointed the markets in the September report. Now, should the readings show decisive tightening of the US employment market, we may see the USD gaining, as that would imply a faster recovery. Moving now to the pound, and this would be cables for our chart. Note the tight range-bound movement despite testing the 1.3750. Now, we tend to maintain a bias for a sideways movement as long as the pair's main body of the price action remains between the 1.3875 and the 1.3750. Now, to the downside, we would also like to note the 1.36, which tended to provide considerable support around the 11th and 12th of October, while even lower, the 1.3430 should be mentioned, which supported the pair's price action around the 30th of September. To the upside, we would note the 1.3875, higher than that the 1.40, and even higher the 1.4125. Moving now to pound's fundamentals, the pound seems to rise against the USD, yet cable's recent stabilization should be noted. On a fundamental level, the promises of Chancellor of the Exchequer's Rishi Sunak for more fiscal support on Wednesday seem to have passed almost unnoticed by pound traders. But the Bank of England's meeting on Thursday is expected to be a totally different story. Now, the bank is expected to hike rates by 25 basis points, lifting it to 0.35% if compared to current 0.10%. Yet there seems to be a wide uncertainty on whether the bank will actually proceed with a rate hike. Currently, GBP/OIS implied that the market may have priced in by 67% such a scenario materializing, yet provides little certainty for now. Should the bank actually proceed with a rate hike, we may see the pound getting some support and vice versa. Fundamentally, the issue remains the same for the bank, as on the one hand the pressure is high to raise the rates in order to actually combat the rising inflation, which has remained at rather high levels for September, higher than the bank's target at least, yet such a decision could undermine the recovery of the UK economy, especially in a period that is being tormented by supply shortages. On the other hand, the bank's QE program is expected to remain unchanged at £895 billion, as the bank had mentioned a couple of times that rates could be raised regardless of the level of the QE program. As for financial releases, we would note from the UK on Wednesday the nationwide house prices, which was postponed from last week, and on the same day the final PMI readings for October, with special attention being placed on the services sector. On Friday, we also note the release of the Halifax house prices also for October. Moving now to the Japanese yen, and this would be USD JPYs for our chart. Now, there is a sideways movement, however bearish tendencies seem to be evident at the chart. Note how the pair's price action seems to be scoring lower lows, which could imply some strengthening of JPY. Now, to the upside, we note the 113.70, which more or less tended to cap any upward movement of the pair for the past day. Higher than that, we would be also noting the 114.35, which reversed once again the movement higher of the pair around the 19th to the 20th of October. Higher than that would be the 115.20. To the downside, we note the 112.90. Lower than that would be the 112.25, and even lower the 111.60, which reversed the downward motion of the pair around the 7th to 8th of October. For the time being, we tend to maintain a bias for a sideways motion around the 113.70 level. And moving now to JPY's fundamentals. Now, JPY seems to have stabilized against the USD after last week's strengthening. JPY fundamentals could not miss out on the looming elections for Japan's lower house on the 31st of October. Now, we tend to concentrate our words on the scenario of Japan's ruling Liberal Democratic Party losing the elections, which could create some instability in the Japanese political scene. Such a case could be a boomerang for the newly elected Premier Kishida, cutting possibly his term short. Now, an alternative scenario for the LDP to stay in power would be to rule in coalition with junior partner being Komeito, a rather conservative political party. But LDP would still be losing seats in the lower house, which could make Japan PM Kishida's work more difficult. On the monetary front, BOJ's interest rate decisions seem to leave JPY traders unimpressed. As expected, the bank maintained its dovishness as it cut this year's projected growth rate while also projected low inflation for years to come. Now, such readings could imply extensive dovishness for a longer period, setting BOJ behind other central banks, which have started or are considering tightening their monetary policy. It should be noted that BOJ Governor Kuroda more or less implied that a weak yen could have benefits for the Japanese economy, leaving worries for the rise of import costs behind. Now, overall, the bank's dovishness could weigh on JPY, as interest rate differentials could widen the spread against the Japanese currency. Fundamentally, we maintain our worries for the tensions in the region with China and Russia, while also for the supply shortages, especially for semiconductors, which could slow the recovery of the Japanese economy. As for financial releases, we have a rather light calendar with the final Jibun Bank manufacturing PMI for October Monday, and on Friday, the all household spending for September. Moving now to the common currency, and this would be Euro USDs for our chart. Now, the pair has jumped yesterday, actually aiming, if not reaching, the 1.1695 resistance line. However, we tend to maintain still a bias for a sideways motion, and we would require a clear breaking of the pre-mentioned resistance line before calling in the bulls for the pair. Nevertheless, to the upside, besides the 1.1695, which also tended to serve as a support line back around the 23rd of September, we would highlight the 1.1780, which provided ample of resistance around the 17th of the past month of September, and even higher the 1.1850. To the downside, besides the 1.1615, which provided support around the 19th to the 22nd of October, we would also note the 1.1520, which once again was aimed for around the 12th of October, while even lower we would note the 1.1445. Moving now to the common currencies fundamentals, the euro seems to gain slightly against the USD in the current week, displaying a similar behavior against JPY, but not the pound. On the monetary front, the ECB left its monetary policy unchanged at yesterday's meeting. The rates remained at 0% for the refinancing rate and at minus 50% for the deposit rate. Also, the bank's APP is to continue at a monthly pace of 20 billion euros, while the PEP envelope to remain at 1.85 trillion euros, with a moderately lower pace of net PEP purchases being confirmed. Also, the bank reiterated its view about the transitory nature of the current inflationary pressures, which are to accelerate even further. And ECB President Lagarde made actually no effort to conceal the bank's worries about the issue. On a fundamental level, we maintain our worries for the energy crunch of Europe, as well as the supply shortages, especially about semiconductor chips, which could slow down the economic recovery for the area, despite some positive signals coming from the ECB yesterday. As for financial releases, we expect a more easygoing program for the coming week, and we note on Monday Germany's retail sales for September. On Tuesday, the final manufacturing sector's PMI readings for October. On Wednesday, Eurozone's unemployment rate. On Thursday, Germany's industrial orders growth rate for September. And on Friday, Germany's industrial output growth rate for September, as well as Eurozone's retail sales for the same month. Moving now to the Aussie. And this would be AUD USDs for our chart. Note that this is the 4-hour chart. Note how we have an upward motion which seems to be continuing. However, the slope seems to be declining somewhat. Nevertheless, we maintain our bullish outlook for the pair, despite some difficulties around the 0.7540 level. We tend to note that the RSI indicator below the 4-hour chart is above the reading of 50, which could imply a slight advantage for the bulls currently. Now, to the upside, we would note the 0.76. Higher than that would be the 0.7675, and even higher the 0.7765. Note how the pair is already at quite high levels. And to the downside, we would note the 0.7540. Lower than that would be the 0.7475, and even lower the 0.7420, which served as a resistance line back on the 15th of October and now is turned into support. Moving now to the Aussie's fundamentals, the Aussie seems about to end the week in the greens against the USD for a 6th consecutive week, despite some stabilization in the past few days. In the coming week, we note the release from China of the NBS and the Caixin manufacturing PMI figures for October. That's on Sunday and Monday respectively, which could be of interest for Australian exporters of raw materials. Now, from Australia, we note the release of the building approvals growth rate for September on Wednesday, and most importantly, Australia's trade data for September on Thursday. On a monetary level, we note the release of RBA's interest rate decision on Tuesday. The bank is widely expected to remain on hold at 0.10%. Now, currently, AUD/OIS imply a probability of 99% for such a scenario materializing. Practically, the market may have almost fully priced in such a scenario. Nevertheless, voices are heard for the bank to actually bring its rate hikes at an earlier date than the expected year 2024. It should be noted that the headline CPI rate for quarter 3 slowed down to 3% year-on-year, which may have eased the pressure on the bank to tighten its monetary policy, yet is still at high levels. In comments made by RBA Governor Lowe last week, it was mentioned that the current rise of inflation would not be sustainable unless it led to sustainably higher wages growth. Now, should the bank actually maintain a less dovish tone and hint at the possibility of earlier rate hikes, we could see the Aussie getting some considerable support. Yet analysts, on the other hand, tend to underscore the possibility of the bank remaining quite dovish for the time being. Moving now to the Canadian dollar, and this would be USD CAD's 4-hour chart. Note how the pair has stabilized, and practically the movement of yesterday reaffirmed the boundaries of its sideways motion being between the 1.2425 resistance line and the 1.2330. We tend to maintain our bias for a sideways movement between the pre-mentioned levels as long as the price action does not escape either the upper or the lower level. Now, to the downside, we would also like to note the 1.2250 and even lower the 1.2160. To the upside, we would note the 1.25 besides the 1.2425, and the 1.25 tended to provide considerable resistance around the 12th of October. Higher than that would be the 1.2580, which served as a support line well, and that was around the 5th of October, and has now been turned into a resistance line. Moving now to the Canadian dollar's fundamentals. Now, there seem to be some bullish tendencies for the CAD against the USD this week, yet the pair for the time being is confined in a sideways motion, as we have mentioned. Fundamentally, should the drop of oil prices, which was observed on Wednesday and Thursday, be extended in the coming week, it could threaten the strengthening of the CAD, given that Canada is a major exporter of oil. The higher than expected buildup of US oil inventories forced oil prices lower, yet that tendency could prove to be temporary, as tight oil supply and expectations for higher demand seem to remain present in the oil market. We expect oil prices to be closely watched by CAD traders in the coming week. As for monetary policy news, BOC's interest rate decision on Wednesday tended to create some support for the loonie. BOC had great confidence on display, maintaining its interest rates unchanged, yet ending its QE bond buying program in a signaling possibly that rate hikes are coming, which tended to spur cat bulls. Overall, BOC's interest rate decision seems to pave the way for the cat to remain supported on the monetary front against some of its counterparts. On a political level, Trudeau's move to appoint a former Greenpeace activist as Environment and Climate Change Minister tended to create some turmoil among the country's oil industry, yet the actual effects remain to be seen. As for financial releases, cat traders are to have an early start next week as we get the manufacturing sector's PMI reading for October on Monday, while on Tuesday we get the trade data for September and we highlight the release of October's employment data for Friday, which could create substantial volatility for cat pairs. Now, actually that should be the sum up, but before we leave you, as a general comment, we tend to expect the USD to get the initiative over other currencies next week, given the gravity and frequency of financial releases and monetary events scheduled. Now, on the other hand, we may see the US stock markets continuing to get attention, given that the earnings season is not over yet, and we would not be surprised to see the market mood being affected by them. Nevertheless, other currencies could still come into the spotlight as local developments could increase volatility in their behalf. Also, we note the possible influence that US yields could have on the markets. In the past days, US yields tended to drop, probably as a result of the improved market mood and a more risk-on approach. Should US yields continue to weaken, we may see the USD suffering some safe haven outflows. As for gold, we note that the negative correlation with the USD seems to have been maintained, given that the greenback seems to remain soft for the week and gold is benefiting from that. From all of us here at IronFX, best wishes for solid trading.